Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for the segment, we have Rhame, CEO of Reaves Asset Management, to discuss investing opportunities in the utilities space. Jay, it's great to have you with us. Welcome to Trade Talks.
Thanks for having me.
All right, and it's been a volatile year for 2022 with sectors across the board. We've seen what's happened in the technology space and that rotation from growth to value. Give us an overview in terms of how the utilities sector performed for the year.
Well, in a lot of ways, they've performed almost exactly how you'd hope a real defensive sector would. They're down a little bit, down 2 or 3%, I guess, heading into today for the year. Of course, big day yesterday for all sectors. But utilities have been ahead for a while. And I think, typically people might be afraid of investing in utilities when interest rates rise. But what we've seen this year is, as investors were worried about slowdown in the economy or recession or even inflation, utilities were a pretty nice place to hide. And, that's kind of how it's played out.
Explain to us what macro factors and catalysts impact the utilities space.
Well, I think the thing with utilities is they're pretty stable. They're fairly predictable earning stream. Dividends are high and dividends grow fairly predictably. So it's not, you kind of know what the valuation is. You know what the dividend yield is. You know what it's going to be. It's more what's going on with the rest of the economy and how attractive something like that is. So your average utility may be able to grow, reliably 6 or 7% per year in terms of earnings. And this year, that looks fairly attractive when people are thinking about, declining earnings growth for a lot of tech companies, for example. In, the latter half of 2020, as things were accelerating, utilities, aren't as attractive there. So it really depends what's going on everywhere else, I guess.
Right. And we were in a low interest rate environment for a number of years at this point. So at least you have that dividend income when you are in search of rates and yield. But as you look forward, where do you think the investment opportunities are within this space?
Yeah, well, I think it lies in the Inflation Reduction Act, actually. So what that does is it creates tax credits for renewable energy, really, wind, solar, battery storage, and the tax credits are big enough so that it actually makes those technologies very economic. And I think what's important about it is that they're very long term. They're going to be in place until greenhouse gas emissions are reduced by 75%. So that's anywhere from 15 to 20 years. So I think utilities look at that and they're going to spend as much money as possible building out renewable energy. Potentially that creates rising growth expectations. And actually last night DTE Energy put out a new slide deck. They raised their long-term growth goal by 1% or 2%. So there's probably more announcements like that. But it's the bill really is a nice catalyst for the sector.
Mm-hmm. And when you think about the EV market as it continues to grow at scale, particularly with some states mandating EVs over the next decade, that has to be a catalyst when you, again, think longer term within utilities.
Yeah, absolutely. Just for context from the utility perspective, 2 electric cars use about the same amount of electricity as 1 home. So it potentially is a real big demand growth story. And demand for electricity in the US has basically been flat since about 2006. If you think about, everyone plugs in more devices now, but everyone has LED bulbs and everything's more efficient. Electric cars are a new source of demand, which really hasn't existed, for utilities for a long time. So definitely a lot of potential there. And if you think about all the renewable generation that has to be built just to replace kind of existing coal and natural gas eventually, there's that much more to help, usher in the electric vehicle era.
And then on the flip side of that, are there any specific areas within the sector that are not quite as attractive?
Yeah, so it's the hardest part with all this investment, all the spending that has to be done is keeping costs down. Inflation, higher interest rates, all that stuff, hurt it. And no utility really aims to raise customer bills more than 3 or 4% a year. And so if you're growing, renewable generation by 8%, you need to find other places to reduce costs in order to make the bill more palatable for customers. Higher power prices are a potential negative, something that could derail at least the pace of investment spending, maybe in the short term. In the longer term, I think wind and solar and batteries are economic enough that states will still incentivize utilities to build that out. But in the short term, especially if we go into recession, any kind of bill increase is going to be scrutinized, and utilities have to do a really good job of cost controls.
All right. Appreciate the insight, Jay. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.